What is going on, guys? Good afternoon. It's your favorite mortgage lender, Del Kwatmi, coming at us live. Going to talk about the market update as we usually do. Obviously, we know the anticipation is going to be for the Federal Reserve. They are going to be cutting interest rates. Really, tomorrow we will get the decision in regards to what they're looking to do. We are anticipating a pretty significant rate cut. Could be anywhere from hopefully 50 basis points, but on a worst case scenario, we will definitely see at a minimum a shift in regards to the 25 basis points. Now we are going to dive deeply in regards to what the expectation, as we usually was last week. Kind of a recap on that. Last week we know was obviously updates on inflation, CPI report, and producer price index report. Again, measuring consumer spending and then wholesale inflation. Going right into it again, when we talked about the CPI report, it once again showed signs of slowing down. Again, something that we really want to see, consumers spending less money. We obviously got the week prior to that updates on the employment market. So CPI report, how did it end up coming in? Consumer pricing again rose only 2.5%. Once again, marking the slowest reading it was since July, or I should say since February of 2021. If we took out core, that was the one part that kind of threw things a little into perspective, where the core CPI actually held steady at 3.2%, which is where kind of the stance was. We're definitely going to be at that 50 basis point cut. Kind of shifted to us maybe just going at that 25 basis point cut. And one of the major points was really shelter and motor vehicle costs, right? So we saw headline inflation get decline. Core remains stubborn with shelter and motor vehicle inflation. I believe shelter takes up almost 50% of that number. Then we also saw again on the wholesale inflation side, again, that's a producer price index report, that we also saw simultaneously a downward revision from 2.1% to 1.7%, which is great to say. Again, showing that downtick once again of what we're looking to see with consumers spending less money and at the same time producing price index obviously also coming in low. Now, housing, again, once again showing increases core logic. So we know from some of our past videos, we talked about the FHFA, Federal Housing Finance Agency, and then we also spoke in detail when we went over a lot of different information with the Case Shiller. Now we're getting updates on CoreLogic, also showing prices jumping up to 4.3% from where they were last year, continuing to show the power of building wealth through real estate. So again, bottom line, we're starting to see Fannie Mae once again. A lot of changes we're having. We just came out and actually now are adopting, as of our 2025 conforming loan limits, of the 802,650, which is great. If you're a consumer who's looking to purchase a home in that price range, you don't have to fall into a high balance bucket or jumbo loan parameters. You're kind of filling into that. Continuing jobless claims again jumped up the top 1.8 million. Little intentional jobless, but continuing, meaning again, if people got let go, they are still having a difficult time finding employment. And then once again, this week, we're going to get updates on the Fed meeting. We're seeing a lot of different requests where we're starting to see that more than likely high percentage of likelihood. I believe as of this morning, it was a 67% likelihood that we actually might see 50 basis point cut. That's why we're seeing the market really, really shift. We just locked a client earlier today at a 4.9%. They only paid a point, really rolled it into the loan, which was crazy. And then again, a lot of the different expectations where we're cutting the federal benchmark rate, the questions again where it's going from 25% to 50 basis points. We'll certainly see some of those different changes of what we're expecting. We'll get updates again today. We saw on the home builder confidence. Of course, now that the Fed has officially more or less confirmed that they are going to be cutting tomorrow, home builder confidence is up, right? Because we're starting to see a lot of applications for purchase applications. Obviously, applications on the refinance side, really saving our clients anywhere on an average of $350 to $500 a month easily, and rolling in their potential closing costs. And then starting to see, once again, housing starts. We'll get updates tomorrow on that, and then existing home sales, what the different changes are from there. Okay. So I'll keep you guys updated as always. Again, starting to see a lot of positive news, of course, kind of really what we were waiting for. If we looked at really mortgage news daily, where we're at right now, again, kind of teetering at that 6.11 interest rate. So let's go here, boom, boom, 2024. It's nice to see that consistent downward trend of where we're at. And really, I would say over the last, since August, we've been pretty consistent moving on that downward trend. So this is really the information that we really want to see with interest rates starting to fluctuate down. Again, this is going to open the buyer pool. and affordability for many consumers, giving a lot of different people the opportunity to qualify. Okay. I will share this video later on our website under our blog section where you guys can go in and check our market updates. As always, if you guys have any questions, please feel free to give us a shout. Talk to you guys soon.